How's it going, everyone? Boy, do I have a report for you today. The Toll Brothers Q1 earnings summary, meaning the last 3 months. And this report, I'm going to break down for you and explain to you why, for nearly a year, that I've been hearing about housing crash, bubble in the real estate market, massive wave of foreclosures, how I have pushed back against that notion when all the people were putting out clickbaits and these gurus of real estate were saying, beware, housing crash coming, I continually said, no, other way around. My friend Michael Zuber was on the same boat. We were the only two people that I saw in all of YouTube claiming this. And this report today, I'm going to go over these numbers, and I think you'll be blown away by what's happening in the housing market. Now, again, I follow Toll Brothers, D.R. Horton, Lennar, all the big builders to understand, not just from the luxuries of what Toll Brothers builds, but also the affordable of what D.R. Horton builds and Lennar, to get a real sense of where the market is trending. Now, keep in mind, I myself am a land developer. Okay, so this matters a lot to me, to my bread and butter, which is land development, as I begin to, purchase $1 million pieces of property to develop. So this is really important for my own business. And so I'm going to bring it to you all and what it means for the general housing market. Okay. So again, first thing first, continuation. There is no looming housing crash coming for single family homes. And I will say that over and over until I see signs. And right now, with the cheap debt in the market that Powell has continually said he's going to support until the economy is recovered, which is a good ways away, that's here to stay. So cheap fixed rate debt for 30 years, okay? And my good friend Aaron Chapman, who is one of the top mortgage originators in the nation, just did a bit on his YouTube channel, so check that out, where he talks about how rates are actually very much in the bounds of where they have been for some time. So very attractive rates right now in the market. But listen to some of these stats, okay? Now, Toll Brothers, they have 309 housing communities, which is a phenomenal amount of inventory that they manage. They're a massive company, right? So they're all across the nation. So they see trends across the nation. They see what's happening. Here are some key facts. They had a record order growth in their entire 54-year history. This is the most amount of orders by buyers that they've had, okay? Their pre-tax income, they're pre-tax. So before tax, sales minus cost of goods sold, minus all their operating expenses. Essentially, think of it as profit. The year over year, okay, increase. Now, keep in mind, 2020 was also a record year, but versus last year, same time, Q1, they saw a 93% increase. Massive. That's bigger than most tech companies. I mean, it's phenomenal how well they're doing. Okay, they're now delivering most homes in their history. They have seen the most amount of demand for homes in their history, and they think that demand will continue through 2022. Okay, so we're talking almost 2 years from now. Okay, here's one for you: the backlog. This is really important. So they want to understand not just what they're selling today, but what buyers are wanting to buy in the future, right? And they have a long pipeline of that. Again, year over year, Q1 of last year was also a record number of backlog orders, 38% increase year over year. So they take a record Q1 of last year of backlog purchases and increase it almost 40%. Again, massive. Demand is still growing. Really good signs. Now, we've seen recently in the news that lumber is going to increase about 30%. But here's something. Because of price increases, their gross margin, even net of lumber prices, is still expanding through 2022, right? So they're making more money selling more homes at a faster rate with more demand. Really attractive. Last quarter, we had the National Association of Realtors had across the nation about 2.5 months supply in the market. Now, keep in mind, a balanced market's around 6 months. Okay, so we're 1/3 of where we need to be. Well, that has come down now to 1.9 months of supply. So you're seeing, again, more pressure on supply, less supply in the markets, more demand. Naturally, with that comes bigger price increases. Okay, so more appreciation for real estate. Here's one that's fantastic, that's mind-blowing. 50% of all homes that go in the market are in contract in less than 14 days, right? I mean, that's, again, phenomenal. Here's one. 35% of all homes that go on the market receive final prices that are above asking, okay? Again, phenomenal. But here's a really important fact that I got from the report that I think also dictates where prices are going. So when people go into these model homes and they sign purchase agreements, they have the option to put upgrades into their house, right? So if a house, let's say, is $500,000, okay, that's what they sign. And the average amount of upgrades they put into the home is an additional almost 30%. So that $500,000 home, they will put an additional $150,000 of upgrades into the house. What that means, they could afford a house that is 30% more than what they're buying today. So that tells me that if this is the majority of buyers, right? If the majority of them are putting 30% more into the house, that means they can afford 30% more. So the argument is, well, if the affordability gets out of whack, the bubble burst. Well, here's the deal. Clear indication that people have more room to spend. So I think we have a long way to go on the appreciation side, potentially more than 30% over the next 2 to 3 years. Really big numbers here. Here's the last two ones I'll tell you. There's 72 million millennials coming to home ownership, right? So all the demand that is coming is going to continue to push prices up in real estate, right? And on top of that, 25% of all the buyers that they've seen, that they've heard, are first-time home buyers, right? So there's a new market opening, more demand. And this is why when Marco Centarelli and I were talking about rentals and real estate and what we see for the next decade, we were very bullish. And so I think when you think about what this means for your purchases, if you're looking to buy your own home, you probably want to get in now. Otherwise, you will be a renter for some time. If you're buying turnkey rentals, waiting for a crash, don't buy them. Buy the rentals now and make sure that they're cash flowing and get them in your portfolio. Across the board, all these numbers are really attractive. Same thing with the D.R. Horton report. Same thing with the Lennar report. All very bullish signs. And so all these people that are talking about a housing crash are out of their mind. And, maybe I'm wrong. Maybe in 12 months, you can all come back and make fun of me, but I'm pretty sure I've been spot on about this. And for all of you that follow me, hopefully you have benefited from this. So if you like what you heard, give it a thumbs up and let me know what you think. Do you see a crash coming or do you think the prices will keep going up? Thanks.